Shopify. Are we not shopping at Shopify anymore? What's happening? We've lost 70% in our stock in just a matter of a year? What? Shopify has absolutely collapsed. With like all the retail, everyone was buying online, and all of a sudden now we're not. Is it just an overreaction because everyone's going back to work? I think people are still buying online. I don't think much has changed here. Has it been an overreaction? Is it a chance for you at home to buy Shopify? Well, we will check out a bit of the history of Shopify and where it is today, what it does. We'll do a little bit of look at the management group, and we'll do some stock analysis on Shopify and see if this is an investment for you, or maybe the retail sector is doomed. Anyway, let's check it out at Barry Charles. Remember guys, to subscribe to the channel, because you make me all warm and fuzzy inside, as well as smashing that like button so we can see the YouTube algorithm jump way over the moon just like a cow, and we can twinkle, twinkle little star all the way to money-making machine. Anyway, back to Shopify. Let's have a look at a bit of the history of Shopify. Well, first off, it's a Canadian company. Who would have thought? Some people don't even know that. It's a Canadian company, multinational commerce company, just like Alibaba or Amazon. Now it has 10,000 plus employees. It also has 1.7 businesses under its own umbrella. Woohoo! In around 175 countries all around the world. So Shopify was founded in 2006 by Tobias Lutke and Scott Lake after attempting to open Snow Devil, an online snowboarding equipment store. It didn't like existing e-commerce products on the market. As a computer programmer, decided, why don't I just build one myself? So he made the Snow Devils online store, and after only 2 months it was launched. Soon enough it was changed its name to Shopify. 3 years later, an interface for application programming was added, as well as an app store. API allows developers to create applications for Spotify online stores, then sell them on the Shopify app. Then Shopify in 2010 went free on the Apple App Store, which allowed owners to view and manage their stores from their mobile device. Then over time, Shopify just kept acquiring businesses, adding to their portfolio, and next minute they were a big company to where they are today. So let's have a look at the founder of Shopify. He has always been on the board since the induction, and took over as CEO in 2008 and is still currently. Amy Shapiro joined in 2018 as Chief Financial Officer from Betterment, an online wealth management service where she served as their Chief Financial Officer since 2016. So as there's a trendy, at the company before that she was the Chief Financial Officer at Sailthrough, SaaS marketing technology provider, and Senior Vice President of Strategy, Corporate Development and Corporate Communications at Digital Globe. She also held CFOs at Spot Holdings and Standard & Poor's. She also started her career at Ernst & Young, followed by Credit Suisse and Goldman Sachs. Wow. I tell you what, if you want someone with a lot of experience as a Chief Financial Officer, she'd be right at the top of the list. So that's very promising on the finance side here for Shopify. Obviously skip that part, Sam. So that was a look at some of the people that run Shopify. Now let's have a look at Shopify as a stock itself. In the last year it's dropped 74%. What? What is happening with Shopify here? Folks, we're going to get right deep into the financial analysis to see if people have oversold Shopify. First of all, the market cap is 45 billion, so it was around 75 billion at its peak. Now the P ratio is out of this world, 313. This company's got a long way to grow, baby, if you're according to this P ratio. So maybe it's time to buy. Not financial advice. You have to check out the rest of the video before you even think of any chance of buying Shopify or not. Let's carry on with the video. Let's look at the revenue from 2019 of 1.5 billion, 2020 nearly doubled to 2.9 billion. Woohoo! 2021, 4.6 billion, and just a little growth, but I reckon it'll get to 5 billion by the end of the year. So obviously a slowdown in speed, which is similar to most retailers at the moment, online retailers, has seen everyone run away. But did it really need to run away that much? It just shows you where people are trying to take their profits and put it elsewhere. It seems to have been the common trend, especially the last couple of years. We're seeing these stocks rise up, and then they crash and burn, and they go buy another stock, and boom, boom, boom. Is this the hedge funds doing this? And they keep swapping from stock to stock and then selling big time? That's the question you've got to ask yourself, because to me, it seems like a lot of moving around. I understand the Zoom situation for people to sell out. If you were at $50 and it's gone to 500, 10x your money, no doubt about it. Most people should get out. Maybe not fully out, but should have. In this case, yes, you should have fully got out. But that's not always the case. Sometimes it's best just to keep hold all the way for the rest of your life. But in terms of Zoom, it was time to sell. But the revenue's still very good. I mean, to me, that's not a reason to get out of the stock. Now, this is where it gets a little bit tricky to me here. The net income is all over the show. 2019, it was a net loss of 124 million, sorry. And then it was a profit of 319.5 million. Then all of a sudden, in 2021, it's gone up to close to 3 billion. And now they're saying they're going to drop back down to maybe 200 million. Now that is why people got it. Now that is a pure example. I totally understand why people have run away. What the hell has happened? Revenue still increased. And why is the net income just crashed? Well, that's just crazy stuff for mine. It's just unbelievable. That's the cash situation. Well, I was around 2.5 billion in 2019, then jumped dramatically to 6.3 billion, then to 7.7 billion. It just dropped a little bit to about 7.2 billion currently. Now, Shopify, this is a little bit of why people are going, ooh, maybe not. In 2019, it had no debt. Sorry, 2018 it had no debt. 2019, it jumped up to 900 million. In 2020, it jumped up to 1.5 billion. And then up 1.117 billion right about now. So the good thing for you there, they can pay it off straight away. So really, there's no issue there with Shopify. So no danger at all, even though it has increased. It hasn't increased enough to be any worry to the company right now. Total assets have jumped up 3.4 billion to around 11 billion now. And long-term liabilities went up from 473 million only up to 2 billion. This company is looking pretty good outside of the net profit. If you think the net profit's going to go back up, so I'm going to check out. Their shares outstanding of 113 billion. The next couple of years has gone up to 127 billion, so they have been diluting of late. But it has declined. They did a little bit of buybacks so far in 2022. Whether that continues, time will tell. But Shopify is really, and it's not a bad thing, it's really dropped. She said it's been smart business to get more in, buy some more in, expecting for the future to be great. So no doubt about it for Shopify. So Shopify, if you're part of Shopify, you can make money off affiliate programming for referring people to Shopify if they buy something from the business. So Shopify, just like Costco or any of these other companies, look for subscription base to make some money. But where do you see the future here in Shopify? Now, that net income is really concerning that it goes up and down like a yo-yo. To me, suggests what is happening with the financial officer who is supposed to be so outstanding. Yeah, I'm a little bit confused on this one, really. To me, why would you invest in a company that's going up and down like a yo-yo in net income? It should be slowly, steadily going up. So what's happening out there? Is it a failing business? Is this business disappearing, Shopify? Is it just a blip in the radar? Is there something that happened this year that they had to pay off? Because it's happened a couple of times, so that's a very big query for me. What to do? What should you do if you're a Shopify investor or looking to maybe buy into this? Where do you see the stock market price? It's too hard to tell for me. I mean, that could be overpriced still. Yeah, the net income really concerns me that it's been inconsistent. So if I was you out there, I'd stay clear. Honestly, I'd stay clear. I can see it jumping back up, but I can also see it even going down even more. If I had to put a price on Shopify now in terms of where it could head back up to, I'm only looking at 500 at the moment. But everything in the company looks fine apart from their net income. So if they can somehow start settling their net income next couple of years, then 1,000 isn't off the table. But yeah, to me, it's just a bit of a wait and see. If you can find out more about why the net income has been so bad, yeah, so to me, just big concerns for Shopify. If you want to be an investor in this company, do a lot more research before you invest into this company, not financial advice. It could do well, but for me, I would just stay clear. That's enough from me at Barry Charles YouTube here. I hope you have enjoyed the video today. Remember to subscribe to the channel so Shopify can fly high again. And also smash the like button so Shopify gets more people onto their platform to start spending large. So we can all, for the people that are in Shopify, become very, very wealthy. Well, thank you very much for joining me today. I will see you again at the next video. Take care out there.